What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Please subscribe, as I do also provide a separate video that I put out now, as opposed to clumping these together so you guys can look at charts as well. I do believe pairing both puts you at the optimal space in being prepared for the week ahead. Scheduled events are really important to know, as markets can provide a lot of volatility during that time. So you got to be prepared for that. And you want to learn how to manage your risk, and knowing both helps you managing that risk. So with that being said, let's take a look at the previous week. Now, the previous weeks before this past week, we just got out of some major earnings with a lot of big news. Essentially, the theme has been that, again, if you're not AI infrastructure or AI, your company is suffering bad right now. And now we're starting to get some of the data that is reflecting a lot of that stuff outside of earnings, and a lot of these scheduled events that we talk about non-farms, about GDP. They're all essentially reflecting that things are getting a lot worse than what essentially is the narrative that's being pushed out there. So this is something I've always said. Again, the narrative in what you don't want to, you got to balance it very well. You have to understand that a lot of times there's a lot of fear mongering. You understand that people sometimes don't intend to fear monger, but try to give you an understanding of what's going on, because I've always talked about these two different perspectives. You need to understand the narrative that's being pushed, the utopic view, versus, again, the realistic expectation of what's going on. And as of right now, I wouldn't push so hard on the negative side. I'm not a big bear until it happens. We are waiting for an event for that to happen, but I'm very well aware of what could potentially happen, right? And the thing is you don't want to feed one side or the other too much, because that puts you in a bad position to either, one, not pull the trigger, or pull the trigger and then find out, your stock may go down by 30-40%. So again, these are things that don't always occur. There's always corrections during a normal cycle. This is why I always try to bring up the normal cycle throughout the year, and then also understand that the overall trend of the market and essentially the thesis of the thesis of the economy and what's going on and how it's playing out is important on what could potentially happen with scheduled events. So with that being said, again, the theme has been that, again, if you're not AI infrastructure or AI, you're getting absolutely obliterated. So some of these are some of the things that we've seen so far in this past earnings. Starbucks obviously fell 20% for reporting 6% drop in traffic. Uber fell 10% after reporting net loss. Shop fell 20% of weak guidance. A lot of it has been, I've talked about this last week as well. A lot of these companies that are doing well, like Shop, did really well, but the problem is a lot of their forward guidance is looking weak, and it's the same reason why Nvidia, on their last earnings, they blew expectations out of the water. Their essentially papers or reports are just absolutely crushing it on paper, but their guidance is weak. Companies are seeing hard landing coming, and this is where you have to go off the earnings, and that's essentially what the Fed or Yellen or the administration is saying. You have to go off what these companies are reporting, because they're frontline telling you, or essentially presenting to you, what's actually going on. So CVS fell 72% after reporting a net income fell 50%. So things are not great. They are actually really bad. You could probably even say we are in a depression right now, right? And understand that the consumer is extremely weak. They can't go out and buy what they want anymore, and that's obvious when you start looking at Starbucks, right? They're not going out and purchasing these things, so they have to buy needs, necessities. People are skipping meals to either, one, make rent, make their car payment, whatever the case is. There's the rate in which people are getting extremely close to essentially becoming delinquent, and essentially something I've talked about too is the charge rates for credit cards for Discover Card and Capital One. All right, they're roughly around sitting just over 5%, which is something we haven't seen since back since the Great Financial Crisis, right? And then the following months, soon after, It started to accelerate and double, almost triple that when we had a great crash in 2008. So these are things you have to keep in mind and understand why people, they're not trying to fear monger, but provide you information so that way you're not, max betting out here, and understand that at any point, especially the further on we go with these rates being where they're at, every earning cycle is going to be extremely important, because all it's going to take is one headline piece of news that can change this utopic narrative and drive fear like you have not seen. And again, understand with the yield curve inversion, when it's inverted the way it is currently as of right now, we've never come out of this with a soft landing. And you've printed 40% of the money supply. I'm sure you've heard it left and right. But ultimately, there is a lot of concern there. And the problem being is that now you're starting to see, and we talked about how there's a very um, lagging information as far as the data is concerned, where you start dealing with interest rates. And so with that being said, um, and we're starting to actually see it being reflected in these again, mid to small companies are getting absolutely crushed. And a lot of these big techs are continuing to lay off more and more and more people and trying to be agile. So you can see why they're heavily investing in AI, because they still need some of that labor to be done, and they need to be more efficient. So to be able to do that, they need to invest tons of billions of dollars into AI. And that was a concern as well, especially with Meta. People were saying, well, why is Meta selling off? It's because Zuckerberg was spending billions of dollars on a metaverse. And in this particular environment, people don't want to see you just excess spending for no reason, right? People are concerned about that because we don't know what the next couple of months will be when things start to turn around. And you'll see that more so in your Starbucks and all these other smaller companies. You'll start to see when that churn happens. So I say earnings are very important, because you'll start seeing that churn happen in these smaller businesses. Then that will tell you that things are actually upticking. So that's, again, important to watch when we start bringing down rates. I want to put this clear as day. That does not mean demand's going to come rushing in. You have to understand where essentially the consumer is. The consumer is in very bad shape. It's essentially getting burnt, and then you're not going to go out and just go grab the hot pan again right after the fact, are you? You're going to sit, and you're going to have to build confidence again about how to handle the pan, whatever, when it's hot. Maybe put on a mitten, whatever the case is, right? It's going to take you time, is what I'm trying to convey here. So ultimately, understand that even if they just decrease it by 25-point basis move isn't going to really do anything. And then again, understand it's going to have a very lagging effect on top of it. But, and like I've always stated, this is not going to be a scheduled event. There is going to be a big event that's going to force the Fed's hand. If it is a scheduled cut, it's going to be a 25 basis move, and it'll be purely for election purposes only. That's the only reason it's going to happen. But what I'm thinking is that it's not what's going to happen, because I think there will be a big event that's going to force the Fed. We may get a 25-point basis move cut just to, appease everybody, whatever the case is. But ultimately understand that the narrative will change when the Fed have to start cutting rates rapidly. And when they start doing that, it's going to draw panic, because there will be a big event, right? And this is something I have further down here, but the billionaire real estate investor, Barry Stir, I'm probably massacring his last name, but says he expects at least one bank to fail per week. Imagine if there was one. They're concerned about one bank run, right? We had another bank fail about 2 weeks ago. They were so concerned about this little bank compared to the grand scheme of all banks that they bailed out the bank. They bailed out this small bank. Now imagine if you're getting one bank failure a week, how are they going to have enough money to cover for all these bank failures? That is the concern. That is what is going to force the Fed to have to start cutting rates at a rapid pace, just as rapid as they started increasing the rates. So with that being said, when that event does happen, again, there isn't going to be demand there. One, first, because people have no excess cash right now. If they're skipping meals, there is no excess cash. Not only that, these banks are dealing with the same situation. They don't want to put themselves at risk to essentially fail if the environment is not gotten better. And you notice this just a couple of years ago when they printed 40% of the money supply, it didn't matter. Everybody was getting loans because guess what? It was at like 0% interest rate. So people were just giving out free money. They don't care, right? This is how the cycle, that's typically how a cycle ends, right? When you just have so much money in the system that everybody's just spending all this whole utopic view, and then understand that there's always consequences to that, and that this is what happens. And we go through these cycles every 10 years. So this is nothing new. So being said, again, very highly concerning about what could be present, whatever that event is. We don't know what exactly it is, but we do know that there may be a 25-point basis move cut just to kind of appease the administration for election purposes. And then that's it. And then essentially, they'll find out if core jumps up again, that they're going to have to increase it back quickly or rapidly to try to tame the inflation that's currently going on. So it's a U.S. labor crisis with a drop of 2.6 million U.S. native-born civilians. So what is it? What this is saying is essentially that obviously the current circumstances that are going on, that we are in a recession right now, that the birth rate drops a lot during this time. This is normal for every cycle, and this essentially tells you that there's a recession going on. It's another big indicator that people are feared, right? Like, who wants to bring a child into this particular environment in which you're dealing with a recession where it's hard to stay afloat? And so as of right now, we're seeing those numbers decline, and it's declining rapidly over the past 8 months to the sum of 2.6 million. So small business optimism has dropped to an 11-year low. Again, a lot of the data is starting to reflect that you're headed into recession very quickly. And these aren't revised numbers. You have to understand, back in 2008, everything was looking the same way it did. It was strong and resilient. And guess what? They went back and revised all the numbers and showed we had this great crisis, right? And that things were a lot worse than what was being reported. And it's the same thing, because you're trying to, again, steer the narrative that things are okay, because you're not trying to draw panic, because when there's panic, you can cause chaos very quickly, and it's hard to get under control at that point. So that's essentially what happened over this past week. Again, we didn't have a lot scheduled. Things are looking bad. But we are coming into a big week, right? We have a lot of really big information that is very important scheduled events coming up this week. Not a ton, but still the weight on these things are extremely, extremely important this week. Now, we do have core PPI, which the Fed is something that, again, they look at this particularly a lot closer than the core CPI. Core CPI will move the market a lot more, though. Being said, the Fed Powell will speak at 10 a.m. Eastern Standard Time on Tuesday. So Tuesday will be a big day. Now we're starting when it comes to earnings, we're kind of rolling off to a lot of the companies the market really doesn't care about. None of these companies are going to really move the market, right? It's not saying some sort of crazy event can happen, obviously, and then that will steer the narrative. But ultimately, understand, as far as earnings are concerned, this is the point where we actually see a lot of headline earnings and essentially the strength of the economy. What we're seeing is it's very weak. So you're going to see more and more weak earnings on a lot of these smaller companies because they're dealing with a lot of the stress. But again, we'll have Powell speaks. Again, it's always important when he speaks. And see what he says. If it's an open forum, again, it's going to have more volatility during that time. So you want to definitely pay attention when Powell is speaking. And then Wednesday is a core, right? The last thing we want to see is inflation creeping back into 4. You're going to draw massive panic if, inflation starts rolling into 4. Now, on the flip side of that, if for some reason we kind of float around expectations or drop below expectations, you can probably see the market make all-time high and start running, because the next thing they're going to say is this is definitely going to be a cut. All the data will change again. We'll probably get more cuts, 3 to 4 cuts again, priced back in. You have to understand every one of these major data sets that come out are going to, the market's going to fluctuate off of what is essentially guesstimating what's going to happen. And if it does come in like that, they're going to expect that, which there are a lot of essentially economists that are saying they were expecting this inflation report to drop. We'll have to see. If it rises into the fours, you're going to strike a lot of fear, because that essentially just negates the fact that, or essentially reinforces the fact that we are in stagflation, right? The fact that inflation is still high. Jobs are again being pencil whipped. I do believe we're probably creeping close to that 2-digit unemployment rate. Things are looking really bad. Our GDP is suffering. Things are in very, very bad shape. So being said, it will essentially emphasize that we are in stagflation, and understand that there isn't a lot of jobs. Understand that inflation is still hot. GDP is getting low. All these things essentially add up to the fact that you're in stagflation, and we're already seeing that we essentially are in stagflation. It's just, again, the lagging data really isn't there yet. And again, it will all be revised at some point, and it will reflect that you have been sitting in a recession for a long time, potentially even a depression, again, depending on how long this thing is. But you won't, again, get that information until after the fact. So again, a very big week. The core is going to have a lot of weight. It's going to be a very pivotal week when it comes to the core, again, because if it's high, stagflation. If it's lower, market will rip, because it will say, hey, we are definitely getting cuts sooner than later. So just keep that in mind, and then we'll see what happens. But again, that's how the market will interpret Wednesday. As far as upcoming pivots, again, monetary policy isn't till June. We don't have the next one till June. Core, obviously, this week. Upcoming earnings. Now, these are the ones I do have. Earning Whispers chart. Well, I'm going to pull this up in a second. I'm trying to make this video a little bit different, since I'm going to do charts on a separate video now. Tuesday, what I'm really looking forward to is Home Depot. Again, it gives you a great pulse on the market. If you want to see the market start to shift back to a more positive light, what you'll see is Home Depot will be doing well there. Again, Home Depot has been losing billions of dollars. People have been stealing tons of tools and everything from Home Depot, so much so that they're changing the security within Home Depot. I think there was actually guard dogs brought in New York. There is, they're starting to put a lot of stuff in cases, tools and stuff, just because of the massive amount of losses that they do have. Now, Thursday, again, we have Walmart and John Deere. Great indicators on essentially what to giving you the pulse of the market. As far as expected moves, TD is down right now for updates, so I don't have that updated right now. I expect that those numbers to jump quite a bit, but I'll do the charts a little bit later, and then that should be up, and then I can disclose the expected moves during that time. So again, this is Earning Whisper. Shout out to them. They always put together great earnings, essentially schedule for the week. Again, as far as what I'm looking at this week, Home Depot in the morning, Tuesday morning, is going to be important. Alibaba, I think Alibaba would be great. I would potentially invest in Alibaba, but the problem is with a global conflict that's currently going on, they could delist this, and then that would be something I definitely don't want to be in. But being said, we'll see what happens there. It'd be good to watch to see what happens there. C is the same thing. They have a great company, but again, everything with inflation and stuff is so out of whack that you definitely don't want to be in a lot of these smaller companies. Not that they're small, but it's definitely not the time, in my opinion, to be buying until the market shifts. And again, once things start to shift, you'll get another decade where you can just pretty much buy good companies, and then you should be good. But right now, it's more so just buy well-named brands right now, because everything else will get crushed in the meantime. So on Wednesday, Cisco is always good to want to watch. Monday is a potentially good one there as well. But I don't really watch those too closely. They're kind of getting out of some of the bigger earnings. Tuesday or Thursday, like I said, it'll be a big day. As we'll have Walmart. We'll also have John Deere. I really like Baidu is another big one I do like, and JD is another good one as well. But again, I don't typically play China stocks, so I will just be watching from a distance and admiring if they do well. AMAT is could be potentially a good one as well. But again, like I said, we're kind of rolling into the whole Rumble is another potential one to watch. Like I said, there's a lot of good earnings, but a lot of these, again, I'm not interested in a lot of these companies in my opinion. Again, all the major ones I'm looking at are ones that have already reported, except for Nvidia, which Nvidia I think is next week. We do have a short week next week as well, so keep that in mind. Monday the market will be closed, and then we'll have to move from there. So that is that for this week. Like I said, this week it will be pretty short in the sense that there isn't a lot of big stuff going on. But there's some good scheduled. So Tuesday will be big because you got Home Depot, you got Powell, you got PPI, and then Wednesday obviously will be big because you have the core. And then Thursday will give you some great information, especially on Walmart. Is definitely one to really watch and see what happens there, and see how the theft is doing, see how, what consumers are buying. It's always important to kind of watch, get more into the weeds with like Walmart to see if people are buying more. What we've noticed over the past couple of months is people buying more store brand to save the extra couple dollars. And so it's interesting to kind of see those earnings just to kind of see where people's minds are at. And then Home Depot is the same thing. It's excess cash, right? And ultimately understand that people don't have excess cash, so they can't go out and go purchase these things. And understand this is something else too that isn't really being reported is essentially all the home loans that have currently been going on for veterans right now. A lot of those, there's so much delinquencies in those that they just stop reporting them. So again, talk about pencil whipping, and you think I'm making this stuff up. It's happened, right? It happens in front of your eyes all the time. You're getting so many delinquencies, or you're having these other programs essentially that I think in New York, there was some bidding as stuff as well, and they're trying to get people to move into some of these houses, and so they're willing to put like $25,000 or programs that will offer because just to try to close the gap. But again, there's a lot of racial like discrimination going on, and everything's just trying to divide everybody. What's currently going on, again, not try to get political, but again, all that stuff ties into a lot of these different things and how they play out. So with that being said, again, we'll see what happens. I think it's still a great week. Like I said, I'm really actually anticipating to see. I always like to see what happens with Home Depot, but I really want to look into Walmart, kind of see where the consumer is at. If Walmart starts having some weak earnings, that is really concerning. So that should really concern you. That means we're in a depression if Walmart is having weak earnings, because people, if they're going to splurge at all, they're splurging on groceries, and if they start cutting that out, you can only imagine where the consumer is at that point. So if you've made it this far, I do appreciate you. Go ahead and drop a like. Until next time, or take a look out my charts video as well that will come out tomorrow, and then we'll take it from there. So have a good one, manage risk, none of this financial advice, and I'll see you guys on the next one.